All right, guys, this is Andre with the Crypto Ball, and I've been getting a lot of questions from my friends who I've been helping build up their portfolios. How do I get started building a portfolio? What are some things that I should do? What coins should I purchase? And how do I go about it? And so, I wanted to make a video because this channel is a big part about it is to help those that are closest to me. It's really important for me to help my family and friends, and so I've been doing so, and I want to help people out there in YouTube as well because the markets are going crazy. Bitcoin just hit all-time high. Ethereum is about to break an all-time high. This is really a good time to be in cryptocurrency. It's going to bring in a lot of new people into this space, and they're going to have a lot of these same questions. But before we get into that, I just want to say I'm not a financial advisor. I'm dressed up as a fortune teller. Don't just listen to me because you see me on YouTube. Things have been going well for me, but what works for me may not work for you. Make sure that you do your own due diligence. Make sure you understand your investment. Make sure that you know what's going on. So now that we've got that out of the way, how to build a portfolio from scratch, what are the things that I think that you should pay attention to, and how do I think you should go about this? So let's just hop right into it here. So essentially, let's start with the smaller portfolios. Say, for instance, that you are just getting into cryptocurrency and you're just putting in money here or there, and you're just trying to figure out how to get your feet wet in these markets. These are some of the things that I would do. Now, a smaller portfolio, we're just going to go between $100 and $25,000. The reason I picked these digits is because in crypto, your portfolio can grow quickly. There are a lot of projects that have, 50x'd in a month. Just because you have $100 or $1,000 or $5,000 today doesn't mean that you're not going to have $25,000 or $50,000 next month. It's really based on you putting in the time, the effort to find those winners, those home runs, and make a difference for yourself. And so $100 to $25,000 is a smaller portfolio in cryptocurrency, in my opinion. And if you utilize these type of methods, I believe that every person can reach the higher level portfolios. So first things first, and the major thing, and this is going to be a recurring theme on all of these, dollar cost average into these assets. If you don't know what dollar cost averaging is, I will leave a link in the description for a good video on how to dollar cost average. But essentially, you pick a time frame in which you will invest in the market no matter what. So I invest in cryptocurrency every paycheck. Every paycheck, no matter what the price of cryptocurrency is, I'm going to be putting some money into cryptocurrency because I don't believe in the dollar. I think that these assets, I know that these assets are the best assets in my lifetime, and I'm going to be going into them as much as I can on a steady stream. And so by dollar cost averaging into these assets, it allows your portfolio to get bigger and bigger and bigger as time goes on because you are making the decision to invest in these assets. And I think that is very important. And a matter of fact, rather than just waiting and having you guys watch a video, let's actually look at dollar cost averaging, because I think that this is super important when it comes to getting out of these lower investment numbers. So dollar cost averaging is an investment strategy in which an investor divides up the total amount to be invested across periodic purchases of a target asset in an effort to reduce the impact of volatility on the overall purchase. These purchases occur regardless of the asset's price and at regular intervals. So essentially, you might say every 2 weeks on a Friday, I'm going to put in $500. And regardless of Bitcoin or Ethereum's price, you put $500 into Bitcoin or $500 into Ethereum or $250 into both. If you were doing this since last year, you would already be into the experienced portfolio of $100,000 plus. And this is really just showing the compounding effect of dollar cost averaging into these assets, and why I think it is one of the most important things when you're talking about how to gain or build a portfolio from scratch. So, two, a lot of times when people say, well, Andre, I'm just getting started. What should I purchase? What should I buy? What do I do? Where do I go? Um, and there's a lot of choices to choose from. A lot of choices to choose from. How many cryptocurrencies are in the market right now? I mean, there's a lot of cryptocurrencies that are just pulling people away. And there are 12,960 cryptos, lots of choices. Where do beginners go? What do they purchase? And why do they do it? Well, my recommendation for newer people into the space is to focus on the basics. I know it seems like the easy way out or the easy answer, but Bitcoin and Ethereum, I think, are what the newer people should be trying to get into, right? Bitcoin and Ethereum. The reasons being, one, cryptocurrency cannot grow without Bitcoin growing. As of right now, Bitcoin has a big piece of the pie when it comes to these markets. Bitcoin dominance right now is 46.5% of the overall market, meaning that cryptocurrency really cannot grow without Bitcoin growing. And so it's the most conservative play when it comes to cryptocurrency, and it should be a big part of everyone's portfolio, in my opinion. Ethereum is the foundation of smart contracts and DeFi, which is going to be the future of cryptocurrency. And I believe that when you're building a portfolio, no portfolio is going to be complete without holding some Ethereum. And I would not be against even if people just omitted Bitcoin and just went straight to Ethereum. I did that for years. It's really just based on what is most important to you. I think of Bitcoin as a store of value, like digital gold. I think of Ethereum like a thing that can be utilized like digital oil. And so, it's all about, looking into these things and figuring out what's the best for you. But if you are on a smaller portfolio and you're asking for my recommendation, I would recommend dollar cost averaging into Bitcoin or Ethereum while researching long-term assets with ambitious roadmaps. So say, for instance, that you're dollar cost averaging into Bitcoin and Ethereum, but you're really interested in Cardano. Maybe Cardano is your wild card, or maybe Solana is your wild card, right? Maybe you like Polkadot or Luna. But your primary focus for smaller portfolios, I think, should be Bitcoin and Ethereum with some type of wild card to kind of put more risk to reward in a smaller portfolio. That's just my opinion. Once again, not financial advice. 3, learn about the foundations of cryptocurrency in order to procure an edge. This is something that most people in cryptocurrency are simply not doing. Most people are just going into these assets because they're rising, they want profit, and that's all they know about these projects. You would be surprised how many people have so much money in cryptocurrency, they don't understand the blockchain. They don't understand how we're changing the world. They don't understand this financial revolution. And so by you knowing and utilizing your knowledge, it's going to give you an edge. By you going in and knowing the roadmaps for these projects, understanding these protocols, knowing the difference between layer ones and layer twos, these are what's going to separate you from the other people that are just speculators, right? We are investors. We're not speculators. We're using all the information that's available to us to come to a rational decision, right? We are not emotional traders. We're rational people that are making rational decisions and sometimes irrational market. And so what we have to do is we have to separate ourselves from those that are not doing their due diligence, because that is what's going to be the difference. And so once again, you want to learn about the foundations of cryptocurrency in order to procure an edge when you are in the smaller portfolios or even beyond. This is going to be the differentiation between you and other people that have a lot of talk, but really no action when it comes into these markets. So the last and not least for the smaller portfolios is find a niche and abuse that knowledge, right? We were just talking about how we are going to go in, research, do our due diligence, and know more about our investments than the common speculator, right? By us finding a niche, right, going in here and saying, okay, well, I'm dollar cost averaging into Bitcoin and Ethereum. I have a wild card. Maybe it's Cardano. Maybe the niche is to find small cap coins in the Cardano ecosystem and slowly but surely develop a portfolio in that Cardano ecosystem, right? If you find a niche like that, like my niche was blockchain gaming, right? I had some Ethereum. I wanted to get into Bitcoin. I started dollar cost averaging into Bitcoin. And then I was like, okay, well, what about blockchain gaming, right? It's this thing on the horizon. There's really not that many people into it. How do I differentiate myself in this space? And that was really, my first home runs was being in places where others weren't, looking in places where other people didn't want to, and making myself known in communities that were small. And that is what worked for me. So make sure that you're searching out there for these niches and trying to abuse the knowledge when you're doing your research and your due diligence, because most people just simply aren't. And these are the things that I would do if I was still on a smaller portfolio. And these are the things that I'm recommending to my friends as they start to build up their portfolios in this space. And I think that some of my friends are going to be out of this smaller portfolio range in no time. Let's move on to medium portfolios, right? Medium portfolios. For me, a medium portfolio is $25,000 to $75,000. And the reason why is because, as I said, the scaling for cryptocurrency is so high that even though, $25,000, $75,000, like, oh my God, in the cryptocurrency, it happens like that. And so, we need to prepare ourselves for exponential growth because we're in an exponential market. We're in a parabolic market. And as long as we have the research and the due diligence and the patience to not trade with our emotions, but trade with our logic, there's no reason that people that are putting in the time don't get to these numbers, because really, in the total scheme of things, it's a drop in the bucket, right? Cryptocurrency right now is 2.5 billion. Actually, this is we just passed an all-time high for the total market cap. And there's just so much money coming in that there is no reason why we cannot all benefit from this. So without further ado, let's continue into this. First things first, nothing's really changed. Dollar cost averaging into these assets. There's never enough of these assets. Continue to build the empire. Just because you're past a small portfolio doesn't mean that you just stop investing. Capital builds profit. Make sure that you are putting in the money in order to have a proper portfolio so that we can continue to build and grow. You would be shocked how many people just have a big break and then they stop putting money into these industries, right? The initial investment that you put in is the reason why you're having this growth. Don't stop. Take profits when goals are hit. So, as you get bigger and bigger with your portfolio, you need to be expanding the coins so that you can have a more diverse portfolio. There are so many coins with such a big impact that it's imperative that we get a large amount of coins so that we can have growth no matter what, right? For instance, yesterday, Bitcoin had a massive run up. Now it's down 5%, right? But if you are also holding Solana, today is still a pretty good day, right? Terra Luna, it's up 2%, right? Doesn't seem like a lot in cryptocurrency, but on the stock market, 2% day is pretty good. Just make sure that you are diversifying so that every single day, you have something that is rising, right? We don't want to just have $25,000, $75,000 in two assets. We want to have maybe 5 or 10 assets over this. Now, your Bitcoin and Ethereum is probably going to be a larger percentage, but you have your hand in many pies and pots so that we are getting a lot of profit from a bunch of different places. So very important. But you want to take profits when goals are hit. So say, for instance, that you go and Ethereum just takes off, right? You bought Ethereum for 4,000, and then it takes off, and now it's 10,000. You know, you could hold that Ethereum if you really believe in Ethereum, or you could take the money that you gained or take out your initial investment and put it somewhere else in order to grow another portfolio. It's completely up to you. Once again, not financial advice, but I take profits on these assets in order to build other assets, right? So, I may take something from Ethereum and put it into Polkadot, right? Polkadot has parachain slots coming up, pair auctions coming up, and I think that that's a pretty important thing, and I think that it may outperform Ethereum in the short term. Um, but it's very rough because both of these assets have a good foundation, and I think that they'll both do well. It's just up to you to do your research and come to your own conclusions. So we're building the empire here in the medium portfolios. You want to take profits when goals are hit. You want to take out that initial investment and start new positions in some alternative coins with lower market cap and high potential. And then you want to continue a deep dive into smaller cap coins and invest in your niche with fervor, right? So, I told everyone in the smaller portfolios that you want to find that niche. In a medium portfolio, you should have already found that niche. You should be active, often, ready to perform in those niches because you are the one that's doing the research, you're the one that's doing the due diligence, you're the one that's making it happen. If you don't have a niche and you're not doing research, yes, it's still possible to get a higher grade portfolio, but I think it's going to take you much longer. Just being a speculator and going into these assets that other people are telling you to do, you're going to perform worse than someone that actually knows and understands these spaces and are actively making moves based off of catalysts and protocol changes. And that's really just how to outperform the market, is to just be knowledgeable. Knowledge is just so underrated in these markets, and I can't stop talking about it enough. Make sure that you are doing research. More risk comes with greater reward, but only invest what you are willing to lose. This is probably the biggest difference for speculators versus investors. A speculator is not going based off of research, knowledge, or due diligence. They are going based off of emotion and what other people are saying. And so what they're doing is a lot more like gambling, right? It's a lot more like gambling. And so a lot of them will invest on this gamble, but they're not willing to lose that money. And so when you hear people say, oh yeah, I went into crypto and I lost money, that's because they're speculator. Most, if not all, people that have held cryptocurrency on the top 100 list, as long as it's not a stable coin, are in profit. So if people are talking about losing money in crypto, it's because they bought high, they sold low, they got spooked, right? They bought high, it was going down, they got scared, and they cut their losses. Terrible, terrible. Emotional traders, people that aren't knowledgeable in the field, and that's how you lose money. But if you're doing your due diligence and you're knowledgeable in these assets, then you are going to invest what you're willing to lose, right? Because you know that these assets have high upside, and even though they have a high upside, they're volatile assets, and so they can go down. And so you've only put in what you're willing to lose, and because of that, you're able to hold through these storms where other people are selling. It's going to go back up. You're only investing what you're willing to lose. So last but not least, consider some high yield staking or other forms of passive income. You would be shocked at how much passive income $25,000 to $75,000 can make you in cryptocurrency. I'm talking about things that give you, between 10 and 20% on your investment per year, just for sitting there, right? You don't lose anything to do it, but it's just making you more money because you have these assets. And so when we're juxtaposing this to how banks are talking about dollars or utilizing dollars, you put your money in a bank, you get 0.05% from your bank or something like that. And then inflation just makes it negative and you lose money over time. It's not like that with cryptocurrency. And when you have these type of amounts in cryptocurrency, you can come through with thousands of extra dollars in yields from staking or yield farming. And so I think that people with medium portfolios should be taking advantage of that. So these are, once again, um, my advice when it comes to medium portfolios between $25,000 and $75,000. And now we have experienced portfolios. And this is going to be the last thing that I talk about because I really don't want to talk about things that I'm not doing. And so this is where I'm at when it comes to portfolios and how am I building my current portfolio and what are the things that I'm doing. So first off, nothing's changed. Still dollar cost average into these assets. These are the best assets of our lifetime. These are the things that, they got us this growth. There's no need to stop investing. Just because you are doing well doesn't mean that you stop investing. We want a dollar cost average into these assets, whether it be a bull or a bear market. And so, nothing has changed. Two, build a vast array of coins in many different fields. I know in the smaller portfolios, I was saying, hey, focus on just building these fundamentals. Then in the medium ones, I was like, hey, let's take a look at, some larger cap coins, and then you find your niche. And then with your niche, we build a portfolio in an emerging ecosystem, or maybe we get into blockchain gaming, or maybe we, look at some of these smaller coins in order to take more risk so that we can get more reward. But when you are in an experienced portfolio, you're already doing that. People that have an experienced portfolio, at least the ones that I talk to, including myself, we already have that niche. We're already known and developed in that niche, and we're already used to researching in that niche as well as in the broader field of things. And so, really, it's about building a portfolio of coins that have long-term roadmaps, things that aren't going to disappear, on top of your niche, which for me is smaller cap coins with blockchain gaming. So, hold all coins that lead in their industry. This is just what I personally do. Ethereum, the foundation of smart contracts, bringing in DeFi and all of these things, really changing the way that cryptocurrency works. But Filecoin, right, the leader in proof of storage, right? This is a leader in that field. I don't think that they're going away. I think they'll be here for years and years. And if proof of storage really shows up as a concept in order to start storing a lot of data, I want to make sure that I have Filecoin in the future. Chainlink, the biggest oracle in terms of cryptocurrency, bringing in data from outside of the blockchain and bringing that data into the blockchain so that it can be utilized on all of these different platforms. The amount of integrations for Chainlink are numerous, a myriad of applications, and it's really something that I don't think will be going anywhere. I think that it will just grow with the growth of cryptocurrency. It allows me to diversify my portfolio with an asset that has, I still think, quite a lot of upside while still being a conservative play. Polkadot, I think, is going to be the leader in interoperability. Interoperability is going to be an intrinsic facet of cryptocurrency as it continues to develop. Right now, all of these blockchains are really siloed. I believe that something like Polkadot, which allows interoperability, will bring a lot more user-friendly interface in the upcoming years. And I think that it is going to be a great hold. And I think that, when we're holding all coins that lead in their industries, we can't have a portfolio without Polkadot. And then VeChain, the leader of supply chain blockchain technology. They have a bunch of different partnerships that are helping logistics and, companies that are doing logistics get into blockchain technology. And even though I think it's incredibly undervalued today, I think that in the future that won't be the case as its real life usability comes to fruition. And the reason why I bring up these is because these are all things that I have in my portfolio that are leaders in their industry, and it allows me to diversify my portfolio while still being conservative, right? A lot of things in cryptocurrency are super volatile. These are as well, but they are leading the pack. They're making the innovations, and I think that will lead to higher price action in the future. And once again, just like in the medium-sized portfolios, you want to use yield-producing protocols such as farming and staking, especially with numbers like this, $75,000 to $150,000. you're probably going to be getting an extra couple thousand a month just farming and staking with the capital that you already have. And then 3, abuse your niche in a way that moves market and value. I'm sure that you guys have heard about wells and things like that. At least in blockchain gaming, if you have about $10,000 to $15,000, you're considered a whale in some of these games that have such small market caps. And so, what we can do is we can move markets by using, the type of finances that we have in order to, I wouldn't say manipulate, but definitely to bring higher price action in our own benefit. And so these are the things that I'm utilizing. These are things that I'm doing. And also, these are the things that I have done to be successful in these markets. And I've been getting a lot of questions regarding these. And so I wanted to pass along this experience and knowledge to you. Once again, I'm not a financial advisor. This is not financial advice. These are just things that I've done and are doing. And I think that if you are building a portfolio, these are things that I think can help you. And so, why not look into the crypto ball and bring this type of information to you? But hey, just tell me in the comments, like, Andre, you don't know what you're talking about. Kick rocks for giving you these type of steps. But if you do like this type of content, please like, comment, and subscribe. I'm just trying to help others achieve the same type of success that I've done. And there are people out there that are doing way more than me. I'm still learning. This is still a work in progress. But a lot of people are going to be getting into crypto, and they may not have the type of guidance that is available. So I'm just trying to kind of give out free tips and tricks in order to give us step up on the competition. Most of the competition are speculators. They're not investors. By us doing our due diligence and knowing the proper steps to wealth, I think that we can make a difference. Anyway, I'm Andre with the Crypto Ball, and have a great day.